Hello, everyone. My name is Phil Feldman, and I am the National Director of Revenue Cycle Management at Sandata Technologies. And today we're going to talk about the wraparound impact of revenue cycle management on the home care agency mission. Big, long title, but let's talk about what does that really mean? So the priorities of a home care agency are definitely, why did we get into this business? What is our ultimate mission? Certainly client care is the foundation of what we do and why we do it. We want to provide the best possible care to our clients. Then we want to be certain that we grow our agency and we want to grow it profitably. Even if we're not for profit, you need profits to be able to cover your costs, cover your overhead, and make investments in the programs and expansion that will enable you to ultimately circle back and provide better client care. Revenue cycle management is a big part of that in terms of funding that. So if you're not collecting almost 100% of what of the services that you're providing, you are going to be behind the eight ball in terms of being able to accomplish what you need to accomplish. So our environment has gotten much more complicated. Typically, home care was more of a single payer environment, and now we're getting into managed care. We're getting into contracts with skilled agencies. Certainly Medicaid is still there, and state and county programs are still there, but also many agencies are expanding into private pay and trying to develop more revenue streams. That has created a much more complicated environment than it used to be, created consternation for agencies internally, and has demanded a lot more of management's focus than it always did. So what are we going to talk about today? Certainly, we're going to talk about revenue cycle management. We're going to talk about the basic concepts and what are the processes that maximize the success in the revenue cycle management world. But interestingly enough, and if you think along these lines as I am talking through this presentation, you'll start to realize how RCM and care quality kind of coexist, and revenue cycle management in many circumstances supports care quality. So that's our goal today, for me to help you understand that and come to terms with that. So we'll talk about that in terms of both revenue cycle management and care quality, and then also how does technology provide a support to that. So let's get started on revenue cycle management. What is revenue cycle management? It's the series of processes that you go through to ensure that you ultimately get paid for all of your services that you provide as quickly as possible. And many people think about it as, if you look at this circle here, which has the components of revenue cycle management, many people think about it as it's starting with number 3, which is claim submission. But it really starts way before that. There's a lot of preparation that is involved to getting a clean claim out the door. So it starts with authorization. It even starts earlier than that with payer contracting, and we'll go through that. But it's like, I liken it to painting a room. If you've ever painted a room in your home, you have to put up all the tape first, and then you sand, and then you may have to do some spackling, and you may have to do some more sanding. You may have to put down the drop cloths. The painting takes the least part of the time. It's all the prep work that takes the most amount of time, but it's the biggest impactor on the outcome. So what you want to do in revenue cycle optimization, you want to get paid as quickly as possible. You want to get paid as much as possible for the services that you build. And you also want to maximize the authorized services that you do provide, because you're given an auth, you want to utilize that auth completely. And that's what we're going to talk about in the next steps of this presentation. Certainly, we want to, how do we minimize our payment timeline, which is how quickly we get our money, and how do we maximize the payment throughput, which is how much money we get as a percentage of how much we build. So the payment timeline, what impacts that? Obviously, how quickly you can collect the time from your caregivers. So if you're using electronic visit verification, that's a great start. You're not dealing with all the paper. How quickly you get your bills out the door. So what's the timeline between you collecting that time and billing to your payers? which is, gets involved in the timeline to resolve held billing. We'll talk about that a little bit. Electronic data interchange rejections. How quickly do you jump on this stuff, get to it, and ensure that you have the maximum amount of clean claims going out the door? How do you bill? Are you billing on paper? Paper is not the preferred method because it's slower and paper gets lost. Electronic billing is the way to go. Ensuring that your claims are clean. What does that mean? You're billing with the correct procedure codes. You're billing at the correct rates. You're putting all the data in the right spot on the form, and you're using the right form. How do you get your money back? Are you getting paper checks, or are you getting electronically the funds transferred into your bank? How quickly do you process the payments when you're getting paper? How quickly do you get that paper into the bank? Posting your payments, which allows you to see what you have not been paid for, follow up on it. So you want to do that electronically as well. It takes cost out of your organization. You don't need as much labor. And it's also the timeline. The quicker the timeline, the sooner you can get to denials, you can get to short payments, any kind of payment anomalies. And then so having discipline in that regard is very important. Dealing with denials and exceptions. So how do you keep that volume down so you're minimizing that? And how do you manage that? So how do you jump on your denials as quickly as possible, appeal them, and then also a matter of bringing that intelligence back into your organization, because denials are not always the payer's fault. Quite frequently, and I would say most of the time, denials are in the shop of the provider. And we're going to talk about this all a bit more as we move along. So verification of the hours that are reported. Obviously, if you're using electronic visit verification, you want to review and minimize your hours that were not verified. So typically a good system will have a dashboard that will show you what shifts the caregiver attended, what were not. You want to follow up on them as quickly as possible. Anomalies, late clock ins, early clock outs, differences to the schedule. You want to get those resolved, which then creates a situation where that visit can be billed. If you're getting paper, you want to minimize the exceptions with regard to the paper. You want to get the paper timesheets in as quickly as possible. You want them checked. You want signatures to be resolved. You want discrepancies to be resolved. Okay, and then you need a timekeeping system that ensures that you're, collecting the correct time. So, which means that it needs to be integrated, which makes EVV the most important aspect of that. Metrics you can look at for that are a good system will generate a report called aged hours unverified, which is basically how old are your unverified or unconfirmed hours, and billed versus paid hours. When I say billed versus paid hours, I mean hours paid to the caregivers versus hours billed to the payers. So claims not yet billed. So that comes from, as we talked about, time recording and reporting errors, EVV discrepancies, paper timesheet issues. As I said, you want to get those resolved as quickly as possible. Unconfirmed visits, unverified visits, depending on the system that you're in, can be called either one. You want to track that back to the coordinator who's responsible for the case. What are they doing with it? Are they looking to get it resolved? Are they educating the caregivers that this time needs to be reported on a real-time basis? Looking at split shifts. So those are shifts that occur twice in one day. So there may be a morning shift and an afternoon shift. Payers typically want those rolled up onto one claim. So if there's one shift that has not yet been reported and another one that has, you want to get the unreported shift into your system so that you can get that bill for everything out the door. Otherwise, the system, the shift that's in your system is being held hostage by the unreported shift. So you want to look at time reporting errors. You want to look at your held billing, which is your system edits. A good system will have edits that will hold the billing. Go through that, resolve it. It will also include things like authorizations where you're providing services beyond the end date. The auth has expired. Procedure codes, authorization matches. So you want to monitor those reports and make sure that you get your visits released prior to your timely filing deadline. Payment throughput. So payment throughput is how much am I getting in relation to what I billed? So certainly that goes back to contracts administration, having the contract correctly loaded in the system so that you're billing at the correct rates and procedure codes, enforcing that, getting your claims as clean as possible, which we talked about, sending out your invoices correctly, using the right invoice form, submission of your invoices timely, not right up against timely filing deadlines, not missing them. But even regardless of timely filing deadlines, getting your invoices out the door as soon as possible after you provide services. Okay, billing the correct payer, and we'll talk about that when we talk about eligibility. Managing your authorizations, we'll talk about that as well. And then service issues. So particularly in the private pay world, if you're not resolving service issues for your private pay clients, they're not going to pay the bill. So you want to get those resolved. You want to get future services provided correctly so that your private pay clients are happy and paying their billing quickly. So let's talk about contracts administration, which is the first step of the process. If you don't have a contract in place, then you will not, either you're not going to get paid or you're going to get paid at a network, which is a much lower rate than typical contracted rates. So you want either a contract that covers that payer, or you want a single case agreement with that payer that covers that client. You want to make sure that you have the latest amendment to that contract loaded into your system. So if there was a rate increase, you want to make sure that you're billing at the correct rates, because many payers pay you based on what you're billing them versus what's in your contract. And then when, typically amendments and rate increases are retroactive, you want to make sure that you circle back and back bill to the effective date for those new rates. So I have a tool that I want to show you, which is called a Charge Master. It's an Excel spreadsheet. And if you contact me, I'll be happy to send you the template for this. But basically, it lists all of your contracts, all of your amendments, indicates when they were received, what the inception date is, when it expires, what the timely filing and timely appeal requirements are. And then off to the right, it lists all of your codes, which is enabling you to audit what's my contracted rate versus what I'm billing and what I'm getting paid at. So this can be sliced and diced in a number of different ways. You can sort it by expiration date. You can sort it by rates, things like that, to see how you're doing with each of your payers. So let's talk about eligibility. Enormously important. Eligibility is the largest denial reason. And there's a significant dollar risk there, because if you are billing the wrong payer because you're not checking to see if your client switched payers, which can happen quite a bit in the managed care world, or if they lose Medicaid eligibility, if it takes 6 weeks for you to get paid, you won't know. You're providing 6 weeks of service and billing the wrong payer until you found out that you were billing the wrong payer. And then you have to first initiate the process to ensure you're contracted with the new payer, get an authorization from the new payer. So you could be 2 or 3 months out by the time you get this resolved and start getting paid. So you want to make sure that you have the correct information up front, get their insurance ID, get their Medicaid number, check eligibility religiously on the 1st and the 15th of each month. Don't check it earlier because the databases haven't been updated at that time. If there has been a payer switch, you need to go back to the new payer and get an authorization, which may have to be retroactive to the eligibility date. So remember, an authorization is not a guarantee of payment. Payers will always tell you this. Eligibility is the critical element here in terms of getting paid. So let's talk about authorizations, which are the next step in the process. Absolutely the second largest denial category. So your intake staff should really know how to read an authorization, interpret the data elements, understand the importance of verifying what's on the auth, even checking the calculation of the authorized units, where if you're providing 20 hours of service and the authorization is for 26 weeks, multiply that out to make sure they gave you enough units to cover that authorization period, because payers do make mistakes. So understand that your contract, the procedure codes that you're contracted for have to agree with what's on the authorization. If you get authorized for a procedure code that's not in your contract, you're not going to get paid. So all of that has to sync up. So you have to make sure that you review your authorizations carefully, understand the different formats, check them, and follow up. Also have to follow up on changes and expirations. So a good system will generate an expiring authorization report and other reports where the services that you're providing are differing from your authorizations. That has to be a discipline that you build, and you have to follow up on that. When in doubt about an authorization, contact the payer, contact the case manager. So let's talk about filing claims. So in terms of billing and claim submission, always you need to understand the payer's billing manual, follow that manual, bill it on the correct form. Is it a CMS 1500? Is it UB04? Bill consistently and on time. Bill in synchronization with your pay schedule. So if you're billing weekly, if you're paying weekly, you should bill weekly. Put the correct data in the correct format in the correct fields. So units, bill at the correct units. If you have a contract and an authorization that is for hourly units, don't bill in quarterly hour units. You're going to run out of units really quick. Bill electronically when it's possible to bill electronically. Check in with the payer and see if they'll take electronic claims. And also, as we talked about before, get paid electronically. That gets you your money more quickly, gets it posted more quickly. In private pay situations, take credit cards. It costs you a little more. If you can, build it into your rates, but credit cards will save you a lot of time and hassle. Looking at your payments and denials. So they come together on an EOB. So certainly, as we talked about, get your payments electronically, get your remittances electronically, post promptly, because that will allow you to see what's open in your aging and follow up on those bills. Also, you're looking at your denials as you're posting. So you want to make sure that you follow up on those denials as quickly as possible. And then reconcile your payments to your invoices. Make sure you're not being short paid. Even overpayment situations could mean that there's some sort of an issue going on. You might be subject to having to refund, or you might not have the correct rates loaded into your system and you want to get that taken care of. So follow up on all discrepancies. Denials, absolutely, they need to be reviewed. Somebody needs to follow up on them as quickly as possible. And they could be eligibility issues, authorization issues, expired authorizations, things of that nature. So you want to appeal promptly, you want to get those issues resolved, and then you want to take that intelligence back into your organization in terms of why were we denied and why are we having so many of these same types of denials if that's occurring, and how do I fix that in my processes? Then let's take a look at metrics and KPIs. So how do you measure what's going on? You have all these steps and processes in place. If you can't measure it, you can't manage it. Certainly the aging report is an enormously important tool. Any good AR system will produce that. It shows how, what bills are outstanding from what payer related to what client and how old are they. So you want to review that, work your way through it, follow up on anything that's still outstanding. There's another item that's a template that I can provide to you, and I'll show you now. It's called billed versus deposits versus applied payments. And then look at your expiring and expired authorizations. Run the reports, age them out, take a look at what's going on. Run them well in advance of an expiry so that you have at least 30 days to follow up and get a new auth. So aging report, as I said, if you missed something, it's going to appear as outstanding in the aging report. And as it ages out, maybe the payer missed it, maybe you missed it in appealing denials. Somehow or other, it didn't get paid. So watch it and follow up on those invoices as quickly as you can. The report is a fantastic tool, and it's a very standard tool that's used in any revenue cycle management situation. This is the report I was talking to you about, called billed versus applied dollars by month. So it computes on a monthly basis your net billing. You would get this out of your system. You would run your sales registers, your adjustment registers, your deposits. And what you want to see is, what's the percentage that I'm getting paid as a percentage of my revenue. So you can't look at it on a monthly basis, as you can see if you look down the far right column. Because of varying issues that are going on, those numbers will always, you're going to have peaks and valleys. They're going to jump up and down. But if you look at it over a long enough time period, you'll see what your real collection rate is. So this agency, particularly here, is only collecting 85% of their billing, which is really very way below where it should be, and it's probably causing great issues for them. So they're going to want to put steps in place to get that number up. Like I said, I could get you this template if you would like it. Send me an email, phil.feldman@sandata.com. So develop your metrics, put together reports and things that you want to run. If you can export things into Excel and slice and dice your data, it's always a good way to do it. Try out different reports in your system, filter them in different ways, see what works best. Keep your eye on them. Pick 3 to 5 metrics and watch those metrics and follow up on whether or not those metrics are being impacted by what you're taking, by the steps that you're taking. So now, how does this all get back into care quality, which is really the foundation for this whole presentation? Certainly, what does RCM do for you? We talked about edits, we talked about system edits, looking at unconfirmed visits. These are potentially missed services. So clients have potentially not been serviced, and that leaves you in a situation where the client is at risk, where you are at risk for potential responsibility and liability, but really it's about the client. So if you're watching out for underserved and lost clients, and there are reports that you can run from your system, which are listed here, proposed versus actual times, which is a great report. So it's how much have I been authorized and how much is scheduled and how much time was actually serviced to that client in that time period. So it might be that you have staffing issues. It might be that your coordinators couldn't find someone. It might be that the client is declining service. So you want to get to the bottom of that, because this is all about ensuring that your clients have the service to which they're entitled and somebody made a decision that they're supposed to be getting. So in terms of authorization compliance, so an authorization is somebody has assessed that client, either your agency or the payer have assessed that client and determined a level of care. And the basis for that then is the generation of an authorization. So based on the diagnosis that the client has, based on their assessment, everything has to match back to the authorization. So the schedule, there are many payers that require specific days of service because of the assessment. So if they're giving you an auth for Monday, Wednesday, and Friday, and you're servicing them on Tuesday and Thursday and Saturday, that's a departure from a decision that was made in terms of the service that the client needs. And that's a potential issue that could get the client into a situation where they're not getting, where they're at risk. So look at Medicaid eligibility, address gap periods in Medicaid eligibility. Maybe they lost their eligibility. Maybe they need to get recertified, maybe so that they can continue to get service. Maybe they qualify for a different waiver program. Maybe they qualify for the state marketplace. Remember that the states now are having to recertify everyone after COVID. So there's going to be a lot of changes in eligibility during this period of time. People are going to lose coverage. So you want to make sure you shepherd your client into coverage so that they can continue to get care. Certainly hospitalizations, when they get out of the hospital, typically they need a higher level of service, either permanently or for some period of time. Advocate for them to get a new authorization. So that's all part of the revenue cycle process where you're evaluating these things, who's on service, who's off service. and therefore the revenue cycle process supports authorization compliance and then ultimately supports care compliance. So Ohio has just released a new program called the Ohio Next Generation Program, which is their value-based program. Ultimately, providers are going to be paid based upon outcomes and the level of wellness that they maintain in their client population. So an effective and efficient RCM process gives you the time to focus on quality, because you're not spending your time running down denials, running down unpaid invoices, et cetera. So you can purpose your management time and your clinical management time on the quality of your clients. And then it also provides you with the resources. So if you're getting paid timely and you're getting paid in full, you now have the profitability and the financial resources to make investments in staff training, clinical management, technology, and things like that, that will support client care and client quality. So Sandata Revenue Cycle Management is a service that Sandata provides that actually manages your revenue cycle and acting as your internal revenue cycle department. So this enables you to focus on your growth and developing service lines, improving your profiles with the payer, certainly increasing your profitability. So, in terms of what percentage you get paid across the board, we average 99% of payments to billing, and we give you comprehensive support. So your management, you don't have to worry about managing a staff. You can focus on providing quality care to your clients, initiating new programs, but you'll have both the time and the financial resources to do that. So it's something potentially worth looking into for you, which is the group that I come from at Sandata. Let's talk a little bit about technology. How does technology support this process? So certainly the Sandata system, but any good management system, it helps you reduce lost hours. So EVV gives you real-time alerts for short visits, no-shows, uncovered visits. It helps you track your authorizations. So you get expired authorization reports, expiring authorization reports, calculating the number of units you have left, calculating whether or not you've scheduled more hours over the coming weeks than your authorization will allow for. So it helps you manage that process. Helps you minimize denials because of compliance with authorizations, using incorrect service codes, procedure codes, helps you communicate changes to your field staff. So if there's an authorization change, you can push that out in an application that shows up on your caregiver's smartphone and lets you know that there's been a change in the care plan, change in the shift, change in the schedule, etc. Gives you analytics, so you can relate diagnosis codes to caregiver observations, to adverse events, et cetera, et cetera. And then it helps you fill difficult cases because there are applications within that system that help you push out new cases to your caregiver population, even caregiver population that's potentially a candidate for that case, so that they can accept that case more readily than having to make dozens of phone calls to try to find a caregiver to fill a case. So that's it for our presentation today. Certainly, if there are questions, feel free to reach out to me, phil.feldman@sandata.com. Happy to answer, happy to dialogue with anyone on this subject and get into more detail. I always love talking to home care agencies. And if you would like to get more information, just use this QR code and it will connect you with our appropriate department to be able to get you the information that you need. And thanks very much and appreciate it, and best of luck out there in an ever-changing home care environment.